Welcome back. The Commodity Futures Trading Commission Chairman Michael Selig out with a new Wall Street Journal op-ed this morning. Check it out. He backs Crypto.com in its federal appeals fight over states' crackdown on prediction markets. It comes as the U.S. Securities and Exchange Commission Chairman Paul Atkins said the agency is in regular talks with the CFTC about overseeing prediction markets and that the two agencies are harmonizing regulation. The CFTC appointing prediction market executives to a 35-member advisory committee, even as Senate Democrats sent a letter demanding Selig reverse his support for prediction markets. Joining me now is the man himself, the chairman of the Commodity Futures Trading Commission, Michael Selig. Mr. Chairman, great to have you this morning.
Glad to be here.
I'm happy to have you because I know that this is an active situation. In your op-ed, you write, well-known CFTC registered exchanges used by tens of millions of Americans face an onslaught of state-driven litigation across the country, nearly 50 active cases presenting a range of legal challenges. Tell us about those legal challenges.
That's right, Maria, and this is a clear-cut issue. The CFTC has overseen our derivatives markets since the 70s, and since the 30s, we've had a federal regime for the oversight of derivatives markets, and prediction markets are not new. We've had prediction markets since 1992 with the electronic market in Iowa, and that market itself also allowed for political predictions on corporate earnings, and now for sports, and so we're seeing a huge swath of interest in Americans predicting the future, and this is what these markets are about. They're derivative contracts, and so the CFTC is going to defend its authority in this space and ensure that these markets are built and made in America and then not in China or Russia or in anywhere else offshore where we have the risk of information being polluted and manipulated.
So the states are pushing back at you, and they're saying, look, this is just gambling. It's nothing more than this. The prediction market, this is gambling, and the state officials are in charge of gambling in their state. And you say?
That's completely false. So the United States Commodity Futures Trading Commission has overseen commodity derivatives markets, as I said, since the 70s, and there's an exclusive regulatory jurisdiction over those markets for the CFTC. These contracts are very different than when you walk into a casino and enter into an arrangement with a bookie. They're actual derivative contracts. They go through a clearinghouse. They're settled through offset. You can get in and out of your position, and they have certain investor protections that are really important. The CFTC ensures that each of these contracts is not susceptible to manipulation. They can't be self-certified and on an exchange if they're manipulable. So we oversee that. We take that very seriously, and we surveil and police these markets.
The other issue is are these sites, these prediction markets, going to change their mind depending on what the outcome is? Like we saw just recently, as Mark Tepper was just telling me, when Nicolas Maduro was captured, the prediction markets wouldn't pay out the money for those people who said that he would be captured because, oh, no, you said it was an invasion. It wasn't an invasion. He was captured. So what's the story?
Each exchange has its own rule book, and as I mentioned, each exchange is subject to our oversight and regulation. Each exchange is examined by our staff, and part of that examination and part of the original application of the exchange is the submission of an exchange rule book. And the rule book lays out various requirements for participants in the exchange. We review that. The exchange enforces it. So each exchange, in kind of a more free market-based system where we're a principles-based regulator, is able to set its own rules and enforce those rules. As long as the rules are consistent with our statute, it's acceptable to us and it's acceptable to the marketplace. People can vote with their feet and switch from one exchange to another to the extent they don't like how contracts settle. But each exchange has the ability to set its own rules, enforce those, and self-regulate.
And I spoke with Treasury Secretary Scott Bessent on this program about about legislation around this and what you're going to be doing. We also talked about the Clarity Act. But I want to get your take on the competitiveness of this market, because we just recently had on one of the officials from Kalshi, and I specifically asked her about competition, which is growing in the space. Watch this. How are you handling the upstarts that are coming and trying to compete with Kalshi?
If we got where we are now, there was going to be everyone and their moms trying to copy what we're doing. And we actually really welcome competition. I think what we really want is for prediction markets to grow a lot and go mainstream. And more competition is good for customers. For us, what we think is our real differentiator and what really makes us ahead, puts us ahead of everyone else, is better product, better markets, and better liquidity. And we think we're going to continue to have a very big lead against anyone coming into the space now, because we started the company over 7 years ago at this point.
So, I mean, Mr. Chairman, she's the co-founder of Kalshi, but these companies are now in the crosshairs of state regulators.
This is a great example. This company has probably been sued by every state with a casino in it. And the law is very clear on this point that we have federal jurisdiction over these marketplaces. There are subsidiary issues as to what's gaming and whatnot, but it's very clear that we have authority. And it's funny, some of the same folks that pushed Dodd-Frank and now circumstances have changed with the new administration are saying that we don't have this broad authority, but this is the intent of Congress. It's been relitigated over and over in the courts, and it's also been looked at by Congress many times. They've amended our statute just about every decade, and Dodd-Frank being the most recent and massive, we've got clear authority over these markets, and that was Congress's intent.
Well, that's right. Congress has chosen to vest the CFTC with the broad jurisdiction. Now, just to be clear, you're going to send an amicus brief today?
That's right. So we will be filing, likely this afternoon, but in the next handful of hours, an amicus brief that will clearly assert that the CFTC is the proper regulator for these instruments and that state casino regulators are not supposed to be in these markets and cannot act as merit regulators and throw products out within their states. I mean, what we're seeing, the American Gaming Association, led by Chris Christie, has really led an onslaught across the country trying to ban these markets state by state, and we're not going to allow that.
Unbelievable. We'll be watching that, and it's certainly a developing story. Let me get a little broader on digital assets in general, because in the Genius Act, it was very clear what is under the jurisdiction Commission versus the CFTC, but now we've got the Clarity Act hung up in the Senate, and I spoke with the Treasury Secretary about that. Here's Scott Bessent with me last week.
I think what we're seeing in the crypto market over the past few months means more than ever that the U.S., we need market structure, we need clarity, and we need to get this across the line this spring. We got a few recalcitrant actors who said, well, it'd be better to have no legislation than the legislation we don't want. And I think both on the banks, the other crypto firms are united against them. So we need to get this across the line. The U.S. Under President Trump's leadership, the U.S. is becoming the crypto capital of the world with our best practices, best regulation, and for crypto to remain a viable digital asset and move forward, we need to get this Clarity Act done.
So you think it will be? It'll come back fairly soon then?
I'm optimistic, and there's bipartisan support here.
And, of course, crypto and banking executives, including from J.P. Morgan, Bank of America, met at the White House last week for a second time to discuss this stablecoin legislation. Are you going to have to dip into the Genius Act to get clarity on the Clarity Act? What are your thoughts here on this impasse around whether or not crypto platforms should be able to pay rewards? And the bank executives are worried that they're going to see a flight of capital out of their deposits, and the crypto platforms don't follow the same regulations as the banks.
Well, thanks to the president's leadership, we are on the cusp of getting Clarity enacted into law. The regulation by enforcement's over, the Genius Act signed into law, and we've really turned a new page. And I would say the United States today is the crypto capital of the world. But we need to make sure that it stays that way. And this Clarity Act is really critical. The president has been clear that we need to get something enacted into law because we want to future-proof our statutory framework for crypto. We can't allow for Gary Gensler 2.0 to come in and tear it all up. And so this legislation is critical. It's all hands on deck, and we're making a push to get it done. There are some little wrinkles around the point you mentioned on the yield front, which we thought some of this was settled with the Genius Act, but it's coming back to the bear. But we're going to get this thing across the line, and we're going to make sure the United States is and remains the crypto capital of the world.
So in terms of the jurisdiction from the CFTC, where should we be focused? I love your work on the prediction markets. We're going to be watching that. What else?
Well, the CFTC is modernizing and upgrading its rules and regulations for blockchain-based markets, regardless of legislation. We've got so much to do. Our markets are moving on-chain. Derivatives contracts can be executed seamlessly on a blockchain network, but our rules are just not set up for that today. Collateral can move pretty seamlessly on a blockchain network. We have recently, actually last week, announced that we've expanded our list of eligible tokenized or blockchain-based collateral to include certain stablecoins, but we've also been accepting various digital assets like Bitcoin and Ether. And so we're going to continue to expand that intelligently and look at what's happening in the markets. But it's clear that there's demand for this. this and that the banks and the exchanges and all manner of developers are moving on chain, and we're going to be there to help them get there.
Very good. Michael, this is a new world in terms of digital assets. Mr. Chairman, we'll be watching your work. Thank you.
Thank you.
Great to see you. CFTC Chairman Michael Selig. We'll be right back.